stream. And we're going to go here. Can you guys hear me now? How about now? Can you hear me now? So I'll begin in like a minute. We'll just see who else pops in here. My goal today is to just go through the top 10 stocks that I'm going to recommend that you look at this week. And then what we're going to do from there is just rock and roll with it. And I'm going to just take as many questions as I get while we're doing that. So we're just going to go through it all and just kind of figure it out as we go. But what I want to do is just literally run through stocks that I think you need to be looking at for the week. And then we can kind of go from there. We can see which ones work, and then you can look for actionable levels on those and ask questions about process. Any questions you have, let's just keep this really loose and fast. So, hi, Robert. Good to see you. So we're just going to keep this really loose, very informal, and just going through things. So I'll talk, and then I'll come back, and I'll try to figure out how to intertwine your questions about process in this. So it's 1 o'clock. So let's just get started. So the very first one that I'm going to look at today, that I'm going to tell people to look at, and it finally started to move, is this tiger. And let me just pull this up here and start really diving into this. So let's get rid of all these lines, and we're going to start all these lines over. So let's just get rid of all the horizontal lines, and we're going to get rid of this trend line as well. So really what we're going to see here, right, is everyone's been looking at this, and we've been waiting for one level to finally get to where we need it to get to, right? And that level's finally kicked in. So, hey, Paul. So what we're going to do here is just go through this very simply on what we're going to look at. And I want to just walk through the process. So at the end of the week is the best time to review these charts for what you're going to be looking at for next week. That's the best way to do this. And just remember that point. Like, you really want to focus on what transpired on the week, right? So you look at your weekly chart, and we're going to start there, and I'm going to collapse all this, and we're going to drill into this. And then I'm going to just keep looking and checking questions, but let's just drill into this, right? So the interest in TIGR was that we were never able to get over that one area. And why I think this should be something that you're now looking at for the top 10 is, I'm just going to draw this right in here. So you can see this level that we've had an issue with, and we're finally through that level, right? So we finally got through that, but you have this upper trend line that you have to pop over that you're not over yet. That upper trend line coincides perfectly with this long weekly bar. Okay. So really the next level that you're looking for here for this to trigger, because what you have here is you have that H pattern that we've always talked about. You don't have that H pattern anymore. Okay. If it gets through this part of the H, you can see this lowercase h, it has then rejected. Okay. So really what you're looking for is to get about 21.25 on this one. And then from 21.25, we're looking for it to push and reverse. And you're starting to see the green volume pick up as well. And I think that's really important to see. And if you just drill into this one, and we really don't even need the indicators right now. We can get into that. But you can see that 21 line where I'm talking about on the other chart, right? So getting through that, finally getting through that, we're in good shape. And also just look at this. And you see how you have the upper trend here. So over 21-ish, 21.25, this could go. I mean, this is setting up. It's been basing long enough, and we've been in this little trading range, so it could move on. So that's the first one I would take a look at. So yeah, I know a lot of people are just like, are so sick of, I'm just reading the comments. Like, I know a lot of people are so sick of this stock. It's like Groundhog Day. Every day you're getting in this, and then it's just whack-a-mole, right? Like every time it pops over this line, it's just absolute whack-a-mole. But put this on your list, because I definitely would take a look at this one. I think it does have the potential that we're looking for in these kinds of names. And it is trending higher, and you are getting that curl of the 21 and the 50 we have to get over, but I'm not really that worried about the 50. When the 21 curls like this, the bulls are back in charge. So I'm pretty comfortable with the idea. So when you use each date range, and when do you use each date range and interval? So to answer that, Nicholas, let me just preface that, because it's a good question. So the date range on a chart and the interval in the chart really is dependent upon where the key levels are, right? So as far as a date range on this, I mean, if you look at this chart, there's no statistical significance in going past January with this. Zero, right? Because none of this really matters. So it's kind of immaterial. I mean, you can keep going back, but what's the point? Okay. So it depends on your date range, is really dependent upon where you're going to find something that's actionable. And that's what you want to look for. Like, I'll give you a great example of this, because this is a really interesting question and it's important. So here is AMC. Okay. And people know that I like this name, but if you look at this on a monthly, you need to be looking at this on a monthly because of some of these points, these key levels here, right? So when you see these levels, you want to know where those levels are, because we're rejecting them. I mean, this was a pretty clear rejection on AMC. So really the time frames that you want to look at, you can see how it just rejected there, right? So really what you want to look for is you want to look for levels where there's, it's significant. Looking at this on a monthly, this really does nothing, right? I mean, it shows this level on the monthly. And when we get up to that level, then we can start looking at this on Tiger on the monthly. But right now, there's just really no point. We're not anywhere near that level. And so we just keep drilling down into them. So that's the way that's how I use different levels. But the first thing also is look at different time frames. Besides your data levels, look at your different time frames. On Saturdays, you should be looking at all your stocks and weekly charts. So I hope that helps. So, hey, Boca. So I got to get used to the fact that I don't have to type in here. It's kind of funny. So overall, Tiger's one to put on your list. And just for Boca that just popped back in, we're looking at 21.25 is really the level that we're looking for. That's the level that we really want to see. Put it on your list. I mean, look, I can't tell you how many times we're on Twitter, right? And people are asking me, when's it going to go? And it's just bonk, 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 bonk. It just doesn't get through. I'm not worried about this 50 day at all. I like the 21 curl. So I'm going to keep rocking and rolling and just going through the next one and just keep asking questions and I'll get to them. So, and I hope that answers your data question, or as far as like date intervals. And if it doesn't, just hit me back again and we'll cover that. So second, I really like this net, and I'm just going to walk through why. So let's just start here on the weekly on net, NET. So what you're going to see here, and this is why it's important to understand that you need to look at your weekly chart. Okay. So here's your breakdown bar, right? This is that pattern that we go through with those candlesticks. You see this evening star pattern and how we broke it, that clearly showed the high, right? And I'm going to hammer some of these points home, especially, some of these lessons. But once you got through the 77.50, you got through the 21-week moving average, okay? And you see this line, as everyone knows that watched that candlestick video, this line is price rejection. We rejected here last week. We did not reject there this week. The open was the high. We came back, we retested, and we went and we pushed forward and broke out of this entire base. Now, the next line you really want to see, it's set up for already. I mean, you've already set up for this line. You see this 82.25 line? See where we closed? So really what you want to see now on this is just give me a higher high, which would be the 83.5 level. And then this should kick up and it should continue. And there's a huge channel here. I'm going to draw the channel real quick, and then I'll get to more questions or comments. So there's a huge channel right here. Okay. And if you get up into this channel, this thing's 110, 120. There's a ton of movement here in this name. Now, You look at the daily and you see these lines, but we're all curling and we're all starting to point up. And look at the volume, how it's changing. We're going to start accelerating on the volume. So just watch that level I just drew on the weekly. And then your next spot would be like this 95, 96. But I think you're good there. I really like this name. So let's see this. Due to the risk reward ratio, if you're looking at high growth stocks versus value stocks, for example, Tiger, 1 to 4, 1 to 5. Simple question, tool name. Oh, for this, I'm using TrendSpider because it's web-based. It's really easy for beginners because it will actually automate and throw in your trend lines, and it automates a lot of functionality, fib levels. It's simple. There's a link in the description. They give you 7 days. I think they give you 7 days free with it. But it's an awesome program. I mean, it really is. And it's web-based, which I like, so that you're not downloading software. And it's simplistic, and I'm going to use it for this. So the risk-reward ratios change if you're looking for high PE growth versus value stocks. To answer your question, real simple, Paul, no. It depends, but you need to constantly be reevaluating your risk to reward ratios. So like, I'll give you a great example of that, Paul, because it's a good question. And it's actually going to get me into one of the names that I want to go over next. So number 2 is net. This is number 3. Now people know this from the newsletter because we're already in it. So I'm just going to give you an example, Paul, of what you're asking. So when we get in this, okay, this was our price, 14 3/4, right? Our stop, this is supposed to be 13 3/4, but we moved it up because the trade started working. So if you just remember that there was $1 stop here, right? So I'm looking for 5 points, okay, is really what I'm looking for. So when I put these trades on in the newsletter, what I'm always looking for is, can I get 5 to 1? That's where I start. Very simply. Can I get 5 to 1? If I can't get 5 to 1, it does not go in the newsletter. How do you know if you're going to get 5 to 1? You estimate where your target price is. And that's what we've been doing in the newsletter and what I'm trying to get people to understand. Nobody has any idea where these stocks are going, right? We think we know where they're going. But the idea of market timing, and that's why I try to get people to stay away from like the waves, and I know people love it, but you're trying to market time. It just simply doesn't work. You're better off learning to read price and price action. People use market timing stuff and they do well with it. It's not for me. So my point on this one was at 5 to 1 at 15, you're really looking for that 20 3/4 level, right? When we got to this level and rejected, it was a clear sign for me. And that's why I put it out there. I think we were up 40% on this move. Let me just see here. Are we up? We were up. No, we weren't up that high. I think we were right here. Okay, so we were up like 35% and not up a full 5 3/4 on the move, right? So I really didn't have the 5 to 1 that I was looking before we even start trimming. But when I saw the rejection of this, and then I'll drill into this and then I'll see if there's any more questions about it. You know what, we can even get into that. We can even do this even smaller, and look at this rejection. So this was the big move up, okay? And this was a very simple trade for me, right? There was no question about where I was trimming. I gave it some time. It broke here. That was enough for me to see, okay? That was it, because I did not want to ride it all the way back down. So that allowed me to get out of the trade on a percentage basis, not the whole trade, get out of the trade on a percentage basis. And then, everyone trades differently. I just moved the rest of the position to my break even. That's what I did there. And it seemed to work fairly well. But so your risk reward ratios, do they change because you're in Disney versus in Tesla? No, they should not change. You want your numbers and your process to stay the same. But the reason and what you really need to focus on is you need to constantly be reevaluating. So if we're in a market where you're hitting singles and doubles like you are now, right? You need to constantly reevaluate that 5 to 1. And maybe you get 4 to 1, maybe you get 3 to 1, but you don't stay rigid and say, no, I'm holding till I get 5 to 1, or it trades back, because some people will do that. They'll say, no, I'm waiting until I get 5 to 1. If I don't get 5 to 1, I'm selling. And then what they're doing is they're saying, 2.5 will be my break even. if you do the math on it, that doesn't work too well. So I always say that, like, look, if I'm up to that 4.5 and I see a rejection, okay, get out of it or get out of a portion of it. You can always buy it back. And this gave us an excellent opportunity to buy it back. I mean, I really did the other day. Let me just check questions real quick, see if we have anything. Okay, cool. That does make sense. So we're just going to keep rocking and rolling here. So for those that don't get the newsletter, it's out there. It's in the descriptions. It's free. It's 3 times a week. But let's really get into this trade, because there's a couple things I really want people to understand with this one. First and foremost, I don't think this move is over, but I just want to explain this move. And let's get rid of the indicators. And this is skills. So this was the opening on Friday. And let's just get really into this. Okay. So you can understand, because really the value that you're going to get from me is price action and pattern recognition and chart recognition and chart pattern. That's the value that I'm going to add. Okay. That's my wheelhouse. It's what I've been doing for a while. So, but when you see these moves, right, where it looks like we're going to gap up and then it doesn't, and then we rally and you buy the breakout, you buy the rally, and then it comes back down. It doesn't matter if you're trading 100 shares or 10,000 shares. If the liquidity is there, if I'm up in a stock and it hits a level that is a clear rejection, I mean, you can see the evening star pattern there, and it comes back down, I'm out. Now that doesn't mean that I'm out forever. I could be out for a short period of time and then get back in the trade. I already had the initial position from where we put it in the newsletter, but this is really important for people to understand. See this level here? Okay, I mentioned this on Twitter, and thankfully this gives us way more feedback to take a look at and actually drill down into. So what I'm getting at here is that's a full gap fill, okay? So you are really looking at a full gap fill. What is a full gap fill? It's when you go to the closing price, not just the high of the price. So let's just devil's advocate, say that's the high, right? That's the closing price. See how you got to the closing price? And then what do you have? You have a bullish engulfing that tells you that it's time to get back in. So you could literally put this trade on the bullish engulfing once you get above that level on the close, right? You need to close on a bullish engulfing. And then you can use this as your stop. So essentially you're in this trade at $17 and your stop is $16.50. So you're in the trade for 50 cents. And then you see what happens. And then, this one did what we thought it was going to do. We were talking about it on Twitter, and it went up. And the whole time, now you can decide where your trade is. You can decide if that 50 cents is 5-1 and now you're up $2. Do you sell it for 4-1 or not? That's up to you. Or do you just move the stop to break even? Frankly, I just moved the trade to break even, and I'm just going to leave it on because I think there's a ton of potential in it. Now, let's just get into this on the weekly, because I do want to run through this and then get to more questions. This is really interesting, and I'll throw this up there as well. And I think people need to pay attention to this. So the skills, look at the bullish engulfing on the weekly, right? That's insane. You have had no action like that. You had a possible hammer reversal here that was rejected, but you have no action like this in the name. Now look at this volume bar on skills. Okay, that is glaring, and people need to be looking at that. Okay, the 50 week is trying to show itself, and we're above it for the first time since it's like really been out there. But this volume is sick. This is not mom and pop. That's institutional buying, and that's what we're looking for. We're looking for where the institutions are putting money, and that's where they are. And now, if you get back into the daily, can you buy it here? No. You're going to get above this 200. You're going to consolidate in here. And then we should respect this 21 day. And our next level where we should really be looking at buying this is 2050. So that's the third one out of the top 10 that I think you should be looking at. And it's going to do that. And okay, road trade. Can you give your thoughts around position size and general, how big of a cash position to take? Does it matter? Okay, section rotation too. All right, so let me just answer the one that I just saw first. So let's go through this. Okay, can you give your thoughts around position size? Position size is really dependent upon the person and the amount of risk that they're going to take. So what you need to do is you need to determine how much risk you're willing to take on a stock. That's really what it boils down to. So whenever you enter a trade, there are certain factors that you have to look at. How big do I think the move is? Do I have the right risk return ratio? Am I thinking about what my risk is? What is the risk? The risk is $1. The risk is $2. Okay. How much am I willing to lose to be in this? For some people, they'll put 100% of their account in one trade. Others will put 5% in. It really depends on the person and what you really want to focus on. That's skills. And we're going to go to the next one, why I'm talking about this, so that, I want to value everybody's time here. What you're going to see is that it's going to be dependent upon the person, but you need to put yourself in a position on position size where that you're not, and I'm trying to curse here, where you're not freaking out when you're doing this. So, rule of thumb is 1%. That's what people use. Rule of thumb. If you got $1 million, you figure out 1% of that, you don't want to lose it. You have $10,000, you figure out 1% of that, you don't want to lose it. Hi, matey. I will definitely go through XPEV. Let me get through the top 10 first for those people that are following this, and then I'm going to do individual stocks. So, but I'll definitely get to that. Let me just get through the top 10 first, but then we'll definitely get there. So that's position size. Everybody's different. Like Boca just came in and said 2 to 5% per trade. Absolutely. I know traders that won't lose more than basis points on their trades. They refuse to. And that's fine. Everybody's different. Your goal as a trader is to protect your capital, period. So, and go from there. Naya, I'll get into that in a moment. Let me just keep going through these questions, and then we're going to do KLIC. Look, this was one that I was going to put in the newsletter, and then I just wanted to wait until we see the breakout. So put this one on your radar. This is really pretty insane what we saw here with the volume and the move and the encapsulation move. We get through this, and this stock's in the right space. It's in semiconductors, but not only that, see this ascending wedge and how this is going. If we break through this, people will remember this trade from BNTX. This can really go. This is setting up. This is not overextended remotely. If you look at this on the weekly, look at how the week just completely encompassed everything, and now you're closing at a high after this break here. And you can just see the inversion here, right? You see how this megaphone spreading out? And it's not that big to be a true megaphone pattern yet, but you can kind of get an understanding of this. Let me just put this in there so you can see this. I have a position in this already. But you see this megaphone pattern? This is telling you that this is going to start getting parabolic. So that's really what you want to see. And now what we're looking for is a break here. So you're really looking for this level right here. And I'm just going to put this in there. So not that 58.5. You're actually going to want to be a little higher if you're not in already. You want to close above this level. If you reject below this level, you're going to want to get out. We've done this with FUV, Tiger, when we break above these moves, Tilray. People that have been following me for a couple months now know that when you break this, you're going to revert down to the 21-day, and you don't want to be there for that. So let me just go through now and see if we have some more questions. Yes, I'll definitely review those stocks. So that's position size we addressed. I noticed on 4-hour charts that the volume is heavier in the AM than in the afternoon. Do you trade differently based upon the time of day? What tool do you use to determine and track volume real time besides bar graphs on charts? Hey, Bo, really great question. So let me just hammer this part of it home. 4-hour charts definitely serve a purpose. The beginning of the trading day is retail. Okay, just remember that. Write it down. Put it somewhere. The beginning of the trading day is retail. And they're the people that are acting off the open. The majority of institutional investors don't move for the first half hour. They want to see the first 2 15-minute bars. Okay, that's usually what they're waiting for. If you want to see something really interesting, look at the first 2 15-minute bars and how that determines the rest of the day. That first half hour of trading determines it. So you have mom and pop that are running in the beginning of the day. Where you'll notice the differentiation in volume is around 2:30. That's where institutions start looking at putting more money in. For whatever reason, they start at 2:30. The other time frame to really look at is 3:50, because that's when the commitments, if you have margin calls, that's when it's over. You either sell or they force the sell. So if you're in a really tough market, that 350 number is really interesting to look at, because that's when stocks can really rally as well. But what tools do I use to track volume? I use several different trading platforms. There's several different ones that I use, and there's several different charting software that I use. The easiest way to say is find something that works for you, that you can say is real time and that it tracks. And that's the best one to use, the one that you're most comfortable with. There's nuances to it, but it's not going to make that much of a difference. So I hope that answers the question. And then the next question I'll just get to real quick, because this is simple. Are you long base trading most of the time? Michael, that's a great question. And the answer is no. I'm on both sides of the market. And I'm on both sides of the market a lot more than I let on. And the reason for that, VIPS is the next one that we're going to get to. This is 5 on the list. So the reason I don't do it is because I am very conservative, and I don't want to put people in harm's way, especially beginners that are following me that don't understand how much pain you can be in a short. And shorting is a completely different game. So rarely will I bring it up. I did bring up that, the Bitcoin miners and Bitcoin and MSTR, I think are setting up to have some bad times ahead. But that doesn't mean that that like Riot or, look at this trade. Here's a great example, Michael, right? So I have a friend, and we were talking about this the other day, and he's a trader at one of the bigger shops, and you could see how we're holding this 566 level, and he's like, oh, I'm going long because all retail's shorting today. And so Friday he went long. I think that this stock has significant problems, but that didn't stop a almost 40-point move upward in the stock. So I'm very apprehensive about telling people, hey, short here, and then not being there, because this could rally right to the 21-day 682, but that doesn't mean anything. It doesn't mean that the short position is over. It just means that you just got hammered. So look at this on a weekly, and this will explain this a little bit better. On the short side, see how you have this fall, you have this rising wedge here, and you gap down. This is not going higher anytime soon, right? It might trade around here and then curl back down, but we haven't even been broken anchored VWAP yet. So I do trade the short side. I just don't talk about it as much in the newsletter. I am thinking of getting into a system where I can more directly interact with people. And if I do that, I'll definitely be throwing out more short calls, because I'll be able to monitor people more. So I hope that answers be in touch more. It's hard on Twitter. It's really hard because there's a lot of noise. And I trade, so I have to go through that and then look at the chat, and so it's hard for me to to see that. And I get nervous sometimes when I see people not honoring the stops from the newsletter, quite frankly, because my goal is to educate, not to put somebody in harm's way. So VIPS, I just want to walk through this one. This is interesting. This is one of those Hwang blowups, and it's one of the first ones that you're starting to actually see what's going on here. 32.21 is the level that you're looking at here. Breaking above that pushes us. I don't think the 50-day is going to be an issue here, but that takes us to 35. What's interesting about this one is breaking over 35 gets us right into this red bar, and there's no resistance in here. So that puts us in really good shape. And I'm going to get to this weekly, and then I'll answer another question. So just look at this weekly, and you can get rid of these indicators. And I just want to point this out. 1, 2, 3, 4. First green week of volume. What does this pattern look like? Morningstar pattern. Everyone that has not looked at that candlestick chart, look at the freaking candlestick chart. Those patterns work, and they're the 5 basic. And you'll look at this, and you'll get good at it and go, oh, that's a Morningstar. Hey, this is it. This is an H. It's a failed H. Right. Failed H is what you want to see. This gets above that and starts rocking and rolling, and it's going to rip. And it's going to rip fast because people are looking at getting in these names. So VIPS should definitely be on your list. Let's get to another question. So long base. Could you review MP? I will review MP. XPEV will review. Absolutely. So you write that you scoured 500 charts. Could you elaborate? Any indicators that you use to filter? For example, I've seen people using MACD crossovers. Naya, like people love the MACD crossover. The what I'm trying to get people to understand here is that all these bells and whistles, and that's what I call them, whether you're using the new cloud or you're going to use exponential, they are tweaks that you should be learning after you understand how to read price. Once you learn price action, pattern recognition, chart pattern recognition, this is an ascending wedge. This is not a true double bottom. When you start learning that, then you put that stuff in. As far as scouring charts, it's very simple to scour charts. Go look at 200-300 charts a day. I mean, I know people don't want to hear that, but go look at 200-300 charts a day. Start trying to recognize patterns. That's how I scour. I definitely don't just say, oh, I want to look for a MACD crossover, or I want to look for an 821 EMA crossover. If you trade like that and you actually look at trading just off of that without a process, you're going to get hammered. So just be aware of that. It's a really very difficult way to trade. If you're just going to buy something because something crosses, then you're not going to be in the position to take advantage of it when it truly moves on price action, because you're going to be in at the wrong price. Price determines when you get in these. So, and this is a great example. So we went through this, and this is on the list. This is number 6 for people to watch. So this SE position, okay, we were in this kill box forever, bouncing around. Remember, we kept talking about how it's getting tighter and tighter. Well, this is getting ready to go, and it's about time. And this could have a really powerful move next week. The 261.55 level, you really need to watch that level. 261.55. Do not be surprised to see this if you see this in the newsletter. And I'm just going to drill back because I want people to see this. See this channel? That channel's not going away, right? So let me just draw that for you. I'm just going to click it here just so you can see, have an understanding. Okay. So that's the channel you want to be in. You have been basing since February. Okay. So this is getting ready to have a really big move. And it's definitely one that should be on everybody's radar this week. There's no question about it. This is really setting up very nicely. And this is also why you look at weekly charts so that you can draw in there, right? Now look where it bounced. Look at the low. That's not a question. And this is what is important, Naya. After you look at the price action, now you add the bells and whistles, right? So now you can see, well, wow, it hit the 21 week and it didn't break. Well, that's good news. Now, also, you can see where we closed right here. Okay, higher high of this, and this thing's going to push. And we're back, and then we're back in that channel. We're really back in that channel, right? And you can see what I'm talking about if I just do this really quickly, right? Okay, bonk, 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 right? Can't get above, can't get above. Get me above that channel, and you're back in there. And this thing will have a really nice move. That's one that definitely needs to be on the radar. So I hope that was pretty clear. And you're looking at the 262 level. Do you put stop losses in, or do you worry about market makers seeing them? Brett, that's a great question. So I know a lot of people that will not put them in there. Brett, they just won't put them in. And I think that that's something that you really have to be aware of. I think it depends on position size and how close you're playing it to the vest, right? So if I have I don't want to get into my position size, but let me just give you an example. If you're trading 10, 25,000 share blocks, you do not put in stop losses order, because that guy, that algo that can see your feed, that's paying Robinhood to get your info, they're just going to whack you. Okay. If you're trading 100 or 1,000 shares in a very liquid name like Microsoft or Apple, it really is irrelevant, because they're not going to be able to pick you off. Okay. They're not going to be able to drive that down to get you. But if you're playing with size, like let's say you're playing in skills, SKLZ, right? And you're playing on, you're playing 100,000 share blocks, and you put a stop loss out there. Yeah, they're going to hammer you. They're going to try and get to your position, take you out, and then go forward. And there's really nothing worse than that. So let's go to the next one here, NIO. And then after I get through these 10, I'll just sit here and take questions for a while. And I have the question list here, so I am getting to it. I just want to really hammer these home later. And I'm going to post this as well, the recording. If I can I think I can figure out how to do that. So I just want to show this. So everyone kept asking me all week, are you buying NIO? Are you buying NIO? And I'm going to say something. I traded so much this weekend and there were so many good movers that I missed this early. And I'm going to just show this position because I want people to understand why these lines are important. So let's get rid of all these indicators for a moment and let's open this up. So what I want to point out on NIO and where I missed it was right here. Okay, right in this section is where I missed it. How did I miss it? I'm at the low end of the falling wedge. I'm at support, okay, and I'm right at the long-term upper trend line of the stock. And let me squeeze this down here so you can see exactly what I'm talking about. See this line? Look, boom, hits it. Now, where's the trade? For those people that are saying, well, geez, that doesn't really tell me where to execute. Okay, this is where you execute, or I should have executed on this trade. See how you are above that? See how this breaks down? What's that look like? One of those Morningstar patterns right there, right? Boom. That was it. That's where to execute this. It was very hard to execute out of this rising or out of this falling wedge here because of this line here and the amount of rejection that we've had. So what I need to see now and what I'm looking for now is this 4180 level has just, and you can just see it coming across, right? Look how it's been support and resistance for the inception of this move, okay? And this goes back to that question about, date ranges. Well, this is when it's important to go back to November, okay? So you see it resistance here. So flipping this line, this 4180 is substantial on NIO, and I'm willing to wait and pay up. I don't need to be first. I need to make money. So, and just think about that statement for a minute. Now, and I'm going to put the indicators in a minute, but look at that breakout on the weekly and look how tight we are down here now, right? And it's not a coincidence that your low just happens to be the open of that major breakout. So just keep that in mind as well. This is definitely one at 4180 that should be on your list and you should be looking at. And let's see here where else we're at. So he does put, oh yeah, Paul, I do put them in the, Paul's right. I do put them in the stop losses in the newsletter so that people can see it. Just came in the chat. Will this be recorded? Yes, Jose, it's going to be recorded. I'm going to try and figure that out. It's the first one. We're working through the kinks together, brother. So let's just keep rocking and rolling with it and see how it goes. But it seems to be working. Hopefully people are finding this helpful. How do you stay in the game for so long, considering that 90% of traders fail? Luke, that's a really good question. So why do 90% of traders fail? 90% of traders fail because they're listening to somebody on the news or on CNBC saying, buy Apple, and they have no plan. They have no process. They just think it's going to be easy. I'm a big reader, Luke, like huge. And I just reread one of Mark Minervi's books, right? And if you don't know him, you should follow him on Twitter and you should totally read all of his books. Here's a dude without a high school education that just absolutely went out there and crushed the market. But there was a period of 6 years where he didn't make any money. So it takes time to develop these skills. So you know how you fail as a trader? You go out there and start buying out of the money options because some guy tells you to, without understanding the risk. That's it. That's how you get whacked out of the market. So the people that stay in here, and I've been doing this professionally now for over 20 years, the people that stay in the game, your goal number one is to stay in the game. That's it. It's definitely something you got to stay in the game. And how do you do that? You honor your stops. I can't tell you how many people reach out to me and they're like, oh, well, I didn't honor my stop because this guy, he said, don't honor them, diamond hands, all that. That's great, dude. Go get a t-shirt. But at the end of the day, you're going to get hammered. It's not an if, it's a when. And I don't say that to be mean. I say that because I've gotten hammered. I've blown up. Every professional trader has blown up, and it's called tuition. You've paid your tuition. Now you go forward. But to not blow up and not get blown out where 90% fail is you have to stay in the game and you have to learn. You have to constantly be learning. The other thing, Michael, Luke, is consider the idea of understanding the mental aspects of the game. And for that, start reading Mark Douglas's books. Thank you for clearing that up. I got killed on MicroStrategies. Yeah, Michael, that's just been an absolute tough one. That's really been a really tough one. And it's definitely something that people need to consider what they're going to do, with that one. But, I think you got to get out of there. SC Poll, I agree. You got to get in there. I really like that stock. Could you talk about the importance of timing and entering and exiting puts? Yeah, Robert, it's like anything else, but I can get into options. I can do a whole video on options. I was a registered options principal for over a decade, so I can get to that. And then we'll get to another question. I'll get to Jeremy's question in a moment. So NIO, we got the key level. We're looking at 4180. Now this one, everybody's looking at Snap. The fastest growing segment here, and I'm going to walk through this one. The fastest growing segment of any social media company right now is video, right? And that's what's going on here, video, okay? Pins, this needs to be on your list. And it's not just there yet. You got to get over the 75.75. You see this line right here? Now let's throw in these indicators for a moment. You see where you're at? You have to pop over them and then push. So you really get above these two moving averages and this line, and then you're ready for prime time. Look at the base that's been going on here since November, okay? This is setting up. Now, I just want to show, again, why it's important to look at weekly charts. So anyone recognize what this pattern looks like? Right? Looks like a morning star, right? It looks like the second part of a morning star could develop. Where's that second part going to develop when it gets above this point? What's that point? Okay, 75.89. So you call it 76. So a close above 76 on the weekly, and I have a confirmed hammer that's also part of this Morningstar pattern. And that morning, in those Morningstar patterns, your first target on those Morningstars, and I didn't hammer this home in the candlestick video, is the point of where the other left side of the Morningstar pattern is. So this is telling you break here, you can go to $88. And I think that's very realistic for this to move, especially on Snap's news. So that's the next one to put on your list. And I have two more to go through, and then I'll start going through all the questions. Yeah, no, you're welcome for the questions. Please keep asking. How are earnings taken into account? For examples, you have NIO, earnings are next week. Do you give relevance? Yeah, Nicholas, absolutely. No, and I got what you meant, NIO versus no. Yeah, absolutely. Nick, you got to figure that out on your own, and you have to be willing to take the risk. To me, if I'm not up substantially into earnings, I'm out. And it doesn't even matter on position size. I'm not at an institutional level. It's not that level where you have to be in there because you can't get back in, especially NIO. You can trade, and I don't know people's position sizes. It's none of my business, but you can trade 10,000, 100,000 share blocks on NIO all day. It's very liquid. So I don't want to be in that before earnings if I'm not up in the trade. And by up, Nicholas, I would be up at least 10% in my trade to keep me in there. And the other thing that I would look at, if you want to get really technical, I would look at the implied volatility of the move versus what my cost is and make sure that I'm around that. So like, let's say the implied volatility is, I don't know, let's say the implied volatility is 20% or on NIO and I'm up 10%. I might want to blow it out anyway. I might not want to take that risk. But if it's half that, and let's say the implied volatility is 5% and I'm at 10%, then yeah, I'm going to want to stay in there. So QRVO, I hope that answers the question, Nicholas. If not, because it's an important question, because that's how people get carried out. So if it wasn't clear enough, please just let me know in the chat and I'll go back over it. QRVO is number 9 on the list. So out of QRVO, look, very simple trade. Here's your wedge. We're breaking out. Everybody knows I love this space right now. And I just think the space looks great. Let me just pull this down and show you what's going on here. You have this hammer bar. We're going to get above the high of this. This is your next trigger on this. 195.5 is your next trigger. And you're going to push up. You closed at an all-time high on this in this tape. Okay. This is going to go higher. And you can see, look at this beautiful chart and how it's respecting. We have not closed below the 21 week on this stock Okay. Since we've gotten above it since March, you have not closed below the 21 week. Okay. This has definitely got to be on the radar. It's already broken out, and that's why I triggered it and put it in the newsletter. But the trade's not over if you missed it. Okay. So you look at that 195.5 level on this. And then there's one more that I want to go over that I think is really impressive. And then I'm going to go through and answer all the questions and look at all the stocks that people want to look at. Definitely want to hear my insight on options. Yeah, I can go through all that, Michael. When you do options, can you talk about options versus common? Yes. The benefit difference between options is simple. Options give you leverage, and they also quantify your risk. Okay. But there are certain requirements that you need to understand when you play with options. You need to understand time decay, volatility, delta. Like, there's real points to understanding what's going on there. And I got to hammer that home, Boca. I really got to hammer that home. I had questions, but got to go. Thanks for all you do and checking in. That's cool, Jose. Throw your questions out and I'll make sure that they get answered if you're still there. If not, absolutely. Thanks for coming by. I hope you found it helpful. Look at the expected move, quick rule of thumb. Look at the at the money straddle. Absolutely right. Figure it out. That's a great, easy way, Paul. That's a great, easy way to figure out the implied vol. Right, just figuring that out. Right, it's very simple. I like to look at new positions after earnings. Yeah, I agree with that. You can even trade them after you have the earnings call. So after the earnings call, you can even trade them. So you don't have to trade them then. You can trade them after. So let's just get to the 10th one, and then we can go from there. So this just looks like we're ready for a massive breakout. And I'm just going to show you this on the weekly first. Okay. So first on the weekly, you're right here on 4, FOUR. And then you're here, 99.25. Okay. So 99.25, you can see the two levels and how you're wedged in here. What's important about this level is that once we flip this 99.25, so call it 99.5, make the math simple, right? And that'll probably be right around, 150 looks like it was the high of this. I don't think you have to wait for that, but look at what's going on here. Okay. And I want to stress this point home to people and remember this because it's very important. When I have more than one line converging on a location, okay, it's very important. I have 3 lines converging on a location here. Okay. That's very significant and usually leads to a much larger push up. Why is that? It's because 3 different sets of traders are looking at what they're looking for. So in other words, we have one trader that only trades breakouts and needs this line. We have one that only trades wedge breakouts and need this line. We have one kind of trader that only buys when we get above a major, right, channel line. Okay. When they converge, this can have a very powerful move. Now, just to put this in perspective, okay, there's a channel here that you can see from here. Okay. So I'm looking, before I have any issues whatsoever, I'm looking at being at 110, 111. So this has huge potential, and I would watch this level. And I don't think you need to be anywhere near anything but 99.5 on that. So that's the top 10 stocks for those that were watching for the top 10. I'll try to mark those in the time for those that want to see it. And now I will just open it up to questions and things like that. So let's just start rocking and rolling here. So let's go. I like to look at positions after earnings, MWK. So let's go through them. I'm just going to start running through the names. I know MP was thrown out there. MWK, this has an enormous short position. And what I was trying to get people to understand with these short positions is you want to see when they start closing them. What's happening here? I'm going to open this up so that people can really drill into this. What's happening here? We don't even have to go up high. Every time on this MWK, I'm rejecting 24.92. Every single time I'm rejecting that, right? I can't get above that. This is a clear rejection. Remember, candlesticks, the wicks are a rejection in price. Until you get above 24.92, you can't go with that one. You can't take a look at it. Can you talk about sector rotation? Sector rotation, it's a mystery to me. Did I work on a trading desk? Yeah, I worked on several trading desks, Paul. I was on the sell side and the buy side. I founded my own hedge fund. I ran it for years. So, yeah, I've got experience on both sides of the market. Um, Sector rotation. That's the best way to get into this. So sector rotation, the best way to look at sector rotation is this, okay? You have to just look at the volume and see what's going on with it. I mean, in other words, you look at stocks and you see what it's doing, okay? You look at the IBB and you see what it's doing. You see if you're getting that rotation. You see if the rotation's coming in. Now, we really haven't been rotating, right? I mean, we're respecting the IBB's respecting this, but we haven't really been rotating. Okay, so rotations continue, but let me give you an example of this. And I understand where you're going with the question because you're trying to figure out how to get ahead of stuff, but you need the breakouts to change. Like look at XLE. Okay, this is energy. Who cares if it rotates in here? This is not going anywhere. This has been in a 7-year bear market. So you're looking at the rotation from this level, but look at what's transpiring, right? So, you have to really think about sector rotation. If there's two sectors that you're interested in, throw it out there, but you see where I'm going with this. You need to look at all the sectors of the market to determine what's going on. So like, look, I mean, this is clear breakout, XLF. I mean, you have a clear breakout there, right? So is there sector rotation into that? Yeah, people are buying the financials. Well, how high can the financials go? I don't know. Well, I mean, here's from 2008 to now, you have a base. So you have a 13-year base in the financial stocks. What is that going to do? It's going to make those run. There was a guy that just threw one out at me, and he's dead right. I think this was it. It's a 3X for ETFs for banks. Like this is regional banks. Okay. This is a sector rotation, but you got to the top of this and you failed. So he's got to wait for that to break this 333, I'd say 312 to get back into it. But the way to look at sector rotation is to run all your sectors and constantly look at them and constantly monitor them. You have to constantly look at them and monitor them, and every single day. Okay. And this is how you would look at them, because I know where you're going with this. Boca, you got to look at these and go, NASDAQ's up 1%. What's the SOX up? What's IBB up? What's cloud software up? Okay. Same thing. Use all the sectors in the S&P and go, what's up today? I'm up 1% in the market. What's going on? Okay. Why are dividend stocks up? Why is tech in the sector going up? You need to constantly look at them. Okay. Constantly look at them, constantly monitor them on a daily basis. It doesn't take long. You set up a watch list and then you just look at the watch list. I did forget about XPEV. Let's do it right now. And someone asked me about LI, and I'm going to do that right now. So XPEV, this is kind of interesting, just even on the monthly, right? You can just see we're just being walked down. We tried to get above there and do that Morningstar pattern, and we failed. But let's get into this. So XPEV. I mean, you're really getting no love here, buddy. You can't get above the 21 day. You can't get above the 50 day. You see how that's coming in? So you can see very clearly what you've already failed. You've already failed your new rising trend line. And let's get rid of all this and drill into this for you so that you can understand what I'm talking about. Let's get rid of all this too, because this is really immaterial. They're not really in our range right now. And we can just leave that just for time's sake. But let me just show you what I'm talking about here. So you can see that that's support, right? Okay. But see this little rising channel right here? Okay. You broke it. Look at the day you broke it. You opened and you came down to it. Now you're butting heads on it in the 21 day. Where would I get interested in this? Like this is setting up to be one of those M bottoms. I don't know if people know that pattern, the M bottom pattern, but I need to get above the 21 and the 50 before I would touch this. If this gets above the 50 day, I'd be interested. But until then, there's much better names. I mean, there really are. I mean, Tesla's setting up here, and and I know earnings are next week, and to buy that in front of earnings, God knows what their earnings are going to be, and God knows what he's going to say. So, you can't get in front of that before earnings, but I would wait here. I don't see a reason to jump in that. Yeah, I thought so. Thanks for the institutional insight. Yeah, absolutely. Paul, no problem at all. So what are my typical beginning intraday and day scans? Michael, I'm seriously considering doing that with people pre-market. It's one of the things I'm kicking around in my head to see if I can get 15 minutes to go live every day or half hour to go live every day. And how I would do that and show people the scans and show people stuff. That's a really in-depth question. First thing I look at is most active. People are going through float count and a bunch of other stuff. And, I mean, where you start is most active, even over what's up the most or down the most. I would just tell you to start with most active. And let me get back to you on that, on how I would do that. And how I would get into that a little bit better. So I think that I really need to drill into that. And I think that would be someone seeing it more and more on a daily basis on how I do that. So I hope that helps. Stock selection, what are requirements? I look for volume, I look for leaders. And look, what I want to see more than anything is I want to see institutional money come into a stock. Okay, it's not mom and pop that moved GameStop. Okay, that was institutional money. That was Citadel batting people around. That's where I want to be, because that's where the trillions of dollars go, not billions. That's where the trillions go. And to think that, mom and pop are going to move a stock, it's just not going to happen unless it's a super thin name. And then they're the ones that are usually manipulated, and then you're left holding the bag. Like MicroStrategy. People that bought MicroStrategy, they were institutions. That's why I think MicroStrategy comes in, because I think the institutions are going to stop until they figure out what the potential liability is. Crowd, can you please go over that? Absolutely. Crowd, I felt had a higher relative strength than Net. And, obviously I was dead wrong. I constantly am rejecting here. And I want to point this out to people, because this is really important. And this is Crowd. You can see it by CrowdStrike here, and you can see the name up here as well. So look at this, because this is really starting to annoy me. Okay. And I mentioned these candlestick patterns. We keep rejecting here with these wicks. So I finally closed above the 219 level. And maybe they're just trying to shake me out of it before it runs. But with the way that Cloud looks, right? And this is the Cloud ETF. Okay. The way Cloud looks, I mean, we're setting up here. We get above this 27 and a half, 27 and a quarter. This is going to rip. CrowdStrike's got to go up with it. So, well, it doesn't have to. It should go up with it. And you can see how we're respecting these lines. So it should go. I was more into Crowd on Friday than I was into Net. And obviously that didn't work out too well. Net was the clear leader. But I do like the stock, Praveen, and I hope I pronounced your name correctly. Regarding chart patterns, Raphael, how accurate do you think TrendSpider pattern recognition is? Raphael, I think it's a good starting point. Okay. I don't want to answer how accurate I think they are. I think it's a good starting point. And I think the more that you learn how to draw your own channels and get better and more proficient with it, the sooner that you do that, the better off you are. But that gives you an idea on how to do it. Oh, excuse me for the noise. Why I, please? So why I? Let's go. Let's get into it. Got to go. I see no reason to be in this. Like, if you want me to get into the best part of it, here's your best part. See how you held that 200 day? See how you're closing above that 21 day? I think that they're all good signs. The difference between buying it here and buying it over $15 to me, I'm not interested in those 2 points. I'm really not, especially on something like this that's been rolling. The other thing that would concern me, if you don't want to wait for 15, just look at this really quickly. 1263. Okay. That's really should be a concern to people. That 1263 level, can't get above it. So that would be a concern there on why if you don't want to wait for 15, but I would wait for 15. What else do we have here? Thank you very much from Canada. Can you do MMEDF? Sure. Let's go through MMEDF. Yeah, I mean, that's a solid move. I have a buddy that's been taking positions in this, and that's a really solid move. I think that you could be watching this one. I don't know what we look like on the weekly. I mean, that's really huge volume. Wow. Like, that's insane. Like, this is exactly what you want to see. And everyone knows I don't like the smaller names, but when you have a bar like this on the week that just encapsulates weeks, and now we've encapsulated a month. You had to encapsulate the whole month, right? Let's take a look at that. Now, you didn't really encapsulate it. You came darn close to it, but you didn't encapsulate it. But you're really close to doing it. Look, this is very simple. Look at this monthly line that you're looking for. You're looking right here. Get above this. If you're looking at trading this, get above that 360 level on volume, and you have something there. And you should be going right on the weekly. I mean, you should peg right to this now. There's really very little resistance to get you up to this level, right? This $4 level. And then I think that you could rally and get to that 5. This is pretty substantial, this move, blowing through that weekly moving average. And look how your volume is picking up on that as well. So that's definitely one that I would consider. So let's keep going here. MMDF, VYE, please. I had a question about correctly drawing support and resistance line. Everyone has a few tweaks. That's very true, AB. Everyone has a few tweaks to their lines. How much does it matter if you draw on an open and close or wicks? What matters is the percentage of times that it hits your line. Not so much if you're doing it on wicks or you're not doing it on wicks. So some people, when I draw a line, they'll say it's wrong. Well, I'm not interested in where price rejected. I'm interested in where price landed, right? So I tend to look at the open and closes more. It's when people follow the newsletter, they clearly know I'm looking at open and closes. I'm not trying to look at the noise. So let's see what goes on there. But yeah, do tweaks and then see what works for you. I know what works for me. I want to see a line where it has the most data points on open and closes. And then if there's wicks there as well, it tells me that I'm in the right space, right, AB? So like if I'm using open and closes and then all of a sudden I'm getting whacked there on the wick and the wick's rejecting there, well, it tells me that I'm correct because that's price rejection, right? Like here's a clear sign of what you're asking, AB. Like let's just do it. So look, here's a wick, it rejects. Here's a wick, it rejects, okay? There's a wick, it rejects, right? Now it rejected on this side. Price rejection on the sale, price rejection. So it shows you that level. So whether you're using the wick or you're using it, it's where the price is being rejected that's important in your trend lines and on your trend lines and channel lines. That's the most important thing. So, so that's a question. All right, so let's do Tesla. Yeah, Boca, I do think we're going to do pre-market. I mean, I seem to have a pretty decent, or I've had a pretty decent crowd coming in today. We're up to like 40 people, which is great. You know, so that leads me to show that there's definitely interest in me continuing to do these. But let's get into this on the OCGN, and I want to do the OCGN trade. I think that's a good idea to go over that. Yeah, and I'll go over my rejection on that as well. But let's do Tesla real quick because I know that people are curious about this bad boy considering what's happening. So here's what you have to look at. Here's your 50-day, and you're just respecting it, and you're just wedging in here. The issue with Tesla and buying it before earnings is they could crush, and then he could talk about something, and you can get absolutely hammered. So unless you are already up in this trade, I would not be buying it before earnings. You can buy it after the conference call, you know, not even on the move. You can trade it. You can day trade it all you want, but you cannot get involved in this until after the conference call. I've been long this after exceptional earnings, crushing it, right? And then he gets on there and starts talking about Mars or something, or he sounds like he's sleep deprived, and then the stock gets hammered because everyone gets nervous, you know, because when you're buying Tesla, you're buying a great company, right? No one can deny that anymore, but you're buying his vision. So he has a lot of weight on what happens with this. You know, it's like looking at anything, you know, he's the company, he's the face. It's like the Packers and Aaron Rodgers for those that watch football. I mean, he's the face. So you have to watch that. But what's happening here? Look, the 50 is crossing the 21-day. That's great news. That's exactly what you want to see. Look at this on the weekly. I was looking at this earlier. I mean, you have an inside day on this, on top of this base. This is setting up perfectly to run, to retest these highs. I just can't do anything about it until after that conference call. I don't have a very large position in this from a trading standpoint. I do have a position in this from an investment standpoint that I just simply don't touch at this point. And it's from a long time ago. But from here, you got to just watch what you're doing, man. You can't step in front of that train. I can't step in front of that train the way that I trade. So OCGM, we're going to get to that. Let's do that. Let's get to that. OCGM. Let's get into this trade, and I'm going to walk you through what I saw. And for people that are asking about this on Twitter, I just was calling it out live. You know, it was actually fun. But let's stay with the daily first. So the very first thing I saw that got me involved, and I just threw it out there. I'm like, oh, that's an interesting pattern. So here's the one wedge down. We respect the line. We break above it. We get above the 50, and then we get above that bar. Now, this is what I talk about where you're looking for congruence. You're looking for a couple data points. So not only did I get above a higher high, right? I broke over a rising channel. What happens when you break above a rising channel, right? When we show them, you can go parabolic. That had my interest. So now I'm interested. Okay, so then we drill into it. And let's just do a 5 minute. It'll just be easier and cleaner for everyone to understand this. So here's the day. Okay. Here's the line that you guys just saw, right? When you got to here and you break above it, that's all you need to see, right? To enter, right? Okay. Now come into the next day. This is the line previously. Now here's the 23rd. Okay. And you can just see what happens, right? Comes down, tests, bounces back over it, gets over the line, and that was it. Now, these are all other indicating lines, and what I can do with them is, let me do it this way, and let me get to the 15-minute now so that you can see them a little clearer. And maybe we should do the hour. Maybe that'll do it. And if not, I'm just going to start them all over. All right, so let's get rid of all of these, and let's start them over, and let's go back to the 5 minute so that I don't have to keep searching. So what you're going to see here, and this all stems from me drilling down now from that one chart. So then we'll pull this over here. Okay. So here you are on the day. Okay. This little pattern, you break over this. That really wasn't enough for me, right? To enter. Okay. That was not my enter. Okay. I didn't know that it was really going to go. I was still on that line. If you remember where that line was, right? I can actually do this. So this might actually help. I don't know if this is going to be too much or not, but I'm going to try to do one this way so that you can actually see what I'm talking about on both charts at the same time. So this was the line here on OCG. And this is kind of important to understand because it walks through the trade. So you can see I'm at that $10 line, right? Now here you are on the 15-minute. Okay. And you see right where, let me just get to that again. Okay. So you can see right where you're at right here. Okay. So until I got above that 10-minute, right, and get above that 10, I'll show you the bar. Okay. I'm not interested. And here's where it happens. So you have this bullish engulfing that happens, and look at the volume that's there as well. Okay. That's where you want to start focusing on that. And that's where it gets very interesting as far as a trade. What did I see that got me out of this? I saw a couple things. One, if you drill back into this, okay, and let's look at this on the daily, and then you can see how this plays out. Okay, that's where we should have gone to. We should have gone to 14. So, and you can see where that line is up here on the 15-minute, right? So that was a clear rejection to me. What is this pattern? Bonk, doji bar. Looks like we're setting up for an evening star. I don't want any part of that. Okay. Especially in this kind of market on a thinly traded stock. So I gave it until it broke that level, and that's enough. That's it. Out of the trade. No, there's no reason for me to be in here. And then I didn't know that they were going to come out and issue a secondary. I mean, that was really a crappy thing they did to people. But that was the trade, and that's the trade in a nutshell. Hope that was helpful. And let's just see here. That's the OCGN trade. What wicks are you talking about? Support. What are the wicks you're telling you about support and resistance? I've heard that some people think that inverted hammers are bullish because of price discovery. Look, before you get into whether they're bullish or bearish, don't even think like that. Think about them from this standpoint. Think about them as they just simply tell you price rejection, right? That's really it. Can you do a second part of the SMA video? Yes, Nick, I can. Yeah, Naya, let's do, thanks, Victoria. Appreciate that. So thank you for all your hard work you're doing. It was half the course when I ran into your YouTube and completely hooked me. So much value. Thanks. Appreciate that. So let's do LI and let me just get into a single chart here. So, I mean, this looks like so much better, doesn't it? Than, I'm on the wrong chart before I start talking about it and how great it is. Yeah, completely different. I was like, wow, I should be looking at LI. Okay, this is simple. This is what you're saying, and this is really what you need to focus on. This is very simple. See this? You undercut this low. So you formed a true double bottom here. You have a true double bottom. So you might be bottoming here. What you need to see now is getting above these peaks. And you might not want to wait for that. And that's going to be up to you. But 25, 26 is what I need to see. That's really what I need to see in order for me to consider getting involved in LI. And so I don't know why that, okay, let's hide that down. Oh, okay, I didn't know I could do that. I can show these and hide them. Oh, that's interesting. Oh, that's good to know. I was wondering if you could speak in general about your approach when you go about drawing trend lines that go through trends and can appear to have went off track and lost the trend. Yeah, Brett, they definitely can go off trend, but you just have to leave them there anyway because the trend's still there. It just gives you gives you a guide. It's not a be all end all. It's one data point. Thank you. You are the best. Must tell your friends to subscribe. Thanks, Kev. Yeah, I'm going to do this for as long as people like it. I mean, I got involved doing this because I saw the stuff that was being put out there as far as educational on Twitter, and it just aggravated me. So people said, if you were going to do something about it, do something. Comment is covering screen. Yeah, Gary, I just realized that, buddy. I apologize. I'm just learning how to use this. Yeah, Brett, sorry about that. I had no idea. I'm just learning how to use the system. So bear with me, guys. So it looks like that's it. We went through all the questions. So I'm going to end this one. This went like an hour and 10 minutes. So in the future, I think maybe we'll do these on Saturdays and comment on this. I'm going to link this as a recording. I'm going to try, but comment on this if you want to, not more of these, but if you're interested in doing like a pre-market one too, I'm thinking of doing that as well. And I think Saturdays are a great time for us to run through these and people to get a feeling for this. I think it's good. Could you share more on timeframes and how they interact with each other? Any other authors you would recommend besides what you mentioned earlier? Yeah, you got to read everything by Minervi, Robert. Everything. There's 3 people you have to read everything by. And the reason I'm going to name these 3, and it's not a political statement for the one guy I'm going to tell you, is very simple. Okay. You got to read everything by Minervi because he came from nothing. Okay. And he built an enormous business trading stocks. Right. And he's extremely disciplined and he gets it. So the other one that you have to really read is anything by Zanger. Okay. Dan Zanger is a beast, like just an absolute beast. So anything by him, you need to read. And then anything by George Soros, you need to read if you can find the books. Okay. Ahead of the Curve, Soros on Soros, like people that are interested in how to screen for stocks. When you understand how he learned and where he came from and how he learned and what he knows, it's staggering the value that's in that book. And those books by Soros are literally the Bibles for people like Paul Tudor Jones. I mean, he wrote the foreword to the one that you read those books. Option education. Yeah, we'll totally do it. Can you share how timeframes interact with each other? Yeah, you have to overlay them, Luke. You have to overlay the ones that work for you. You have to start and drill down monthly, weekly, daily, and go from there. I pull them up and I have them on the chart all day long. I have, and I'll look at them. So definitely interested in pre-market. Also, people, but yeah, Jeremy, let's just knock it out. I'll just do PLB, and then I'm just going to shut it down, guys. So, and girls, and thank you all for coming. I hope you found this helpful. So I guess you're asking, like, maybe you're asking why I threw this trade out there on Twitter and where I came up with the idea. So I'm just going to walk you through it. We're going to do the one chart because I think it just shows up better, especially if you guys are on a mobile. So you see this line, 45.21. See that line right there? Okay. When we were over that, that let me know that this was something was going on here. See how we're over that? What is this called? Price rejection. What's this called? Price rejection. Why did it stop here? Price rejection. Okay. These wedges, these are telling me where I'm going to have what? Price rejection. But I'm like, man, from here, if I can get into this and flip this, I'm set. So then I drilled down into it, right? And this gets into your time frame question. Then I got into this. Well, here's the line. Okay. Well, what's this line telling me? Boom, over. As soon as I got over this, okay, here's the rejection from it. Here's why I got over it. And then as soon as I got over this, I had this bar. Okay. Then I had this consolidation pattern that makes you reevaluate everything and what you're doing. And now you're going, do I want to really use this as my stop? And that's why you have to honor your process, right? Because anybody looking at this goes, man, well, I was up in it. Now I'm down in it. Now I'm going to stay with it. I'm going to honor my process. Okay. Boom. Takes off. Now we're in the trade and we're in cheaper. But that's what I saw. I overlaid the daily with this. So let's just see. So that's it in a nutshell. Guys, thank you very much. And girls, thank you very much. I had a great time doing this, and we'll do it again most likely next Saturday. And then we think about how I would do a pre-market recording. Have a great weekend, everybody. And broadcast.